Hi traders, this is TradeAlerter from Forexsignals.com, coming to you on Thursday the 4th of September. Listen, it's a huge day in the markets, and those that don't trade FX may not be, well, regularly, may not know that the significance of such a big day in the markets, but it is the central bank meeting for Europe. Now, the ECB meeting that will be coming out in approximately 2.5 hours from now will be followed up by a speech, or well, a press conference from the ECB President Draghi. Now, this is where we expect to see a little bit of fireworks. Now, we might see a little bit of movement early when they do the announcement, but in the speech, what we'll be looking at is the clues as to how close the central bank is to QE. And if they talk about it a lot, then you expect to see the euro fall dramatically, maybe towards 130, maybe even below. If the comment says something there that the market can really move on. Because of the positioning though, and because of some of the issues around QE regarding Germany's sort of politically against it, you may see that he doesn't comment on it as directly as you'd like, and there could be some volatility here. Alright, so if the market does go up, he probably has something for the bears, alright, so the guys who want to sell. But if the market does go up, it's probably because he doesn't directly comment on the QE, but you may want to sell into that sort of scenario. So that's my main base case here, and it's a pretty popular one out there, which makes it a little less likely to happen. But if it does, we get a move towards that 132.20. Then this is one of the high probability trades that we're going to get this year. Alright, so we're looking for the market to move up when he doesn't explicitly mention QE, but then to fall down when he gives something that the market can grab a hold on for the bears later. If you see the market go up to 132 and hold there for the next 24 hours, that would be against what we're looking at. Doesn't mean you have to close out, but the trade itself will change. So it's one where you may want to just take the loss and then look to sell again if it continues up on a short covering rally. Because the market is so short, it may actually go further than people think. So when people say, that everyone wants to sell at 132, they may actually get a little bit nervous that maybe going towards 133. And this is in the case scenario where the ECB disappoints. In the scenario where the ECB doesn't disappoint, they probably will break and go towards that 130. I think that level might be a little harder, especially on a dip below 130. I won't be selling below 130 on the first attempt. I'll be selling on the second attempt. So the market goes to 129.60, back up to say 130.20, 130.30 in Asia tomorrow. Then look to sell into that. Europe can roll over in the next day and be more aggressive. Especially if the non-farms tomorrow come in strong, that will further diversify the different central bank policies. Alright, so what we're looking at there is the dollar yen. It's going to move first. We've got some numbers out from the US, which is the private employment numbers. Now, if they're super strong, then you may see some front running ahead of the NFP, and you may see the market get back above 105. If they're super strong and the market fails to get past, say, 105.10, that'd be a little concerning that the market's stretched here. Alright, so just take that into consideration. If the market dips down towards that 104.50 level, that's the level I'll be looking to get a little bit long here. And there's a scenario here where you may want to be a little bit, maybe not even trading this pair until after the NFP, but that's something we'll talk about tomorrow. Okay, spend some more time on tomorrow. Looks probably not going to move much. It's going to be a sideline act to the euro. Okay, so the ECB there, we set some sell limits up here. 132.70% is ambitious, but when the market's everyone wants to sell, then those sort of moves that you get. In terms of Euro Swiss. Now you may notice I didn't do a speech a video yesterday, and that was because I actually took a day off earlier that day. I closed a basket of trades for a larger loss, and I decided to take that day off and sort of reflect on the market, so maybe take a night off the market. Wasn't much data yesterday, so what we're looking at there is just get your head in the right space. Back now, fully charged, ready to go into such a big day where you're really going to need your wits about you. Pound, It's still towards this 164.60 level, a key level in the market. Previously, we saw on the daily. We saw the daily here back. So back in March, we saw the market pull back towards that level and did bounce off it. This is early in March. Go back up. So far, we did break it, but we're stalling here, which is giving a little bit of hope for the rebound here. But if the euro drops down tonight, it's likely to take the pound with it. The pound's got this festering problem with the Scottish ongoing polls, and we're going to have to wait until we get another poll. It's really not it's disregarding anything else. Then this price action may look like it's ready for a bounce, but it really easily could slow a couple hundred points towards the bottom end of its longer term range. So a lot of people will be looking to get in, probably on these top levels. That's probably the targets. Around about one. You see them banded around 163, 162.40, I believe, as well. You can see a little congestion here. And so you're probably going to see the market continue down there. I think that was one of my big losses as well. Sometimes the market does turn from an uptrend into a downtrend without that pause in the middle, and that really does catch in traders who are believing a story about a market unawares. So the UK have gone from raising rates, the first central bank to raise rates, to a new regime about when to raise their rates, and also some political issues with Scotland maybe leaving, and then Britain may be leaving the eurozone. That's something else which is in the background as well. And when the market gets bearish, it does focus on this. It doesn't really give you much of a chance to get out. The only chance we had was a couple of days ago. We saw market bounce back towards 166.50, and if you were following me, you see that I did sell there. But I was expecting the market to probably only pull back towards 165.70, and then you saw that news break about the Scottish polls getting close, and that really led to a big pullback here. And look, if they do actually succeed from the UK and becoming an independent nation, you're probably going to see a bigger pullback, maybe towards 160. So that was half the reason why we decided to close the whole basket. Sometimes when you're not trading the market well, the risk is a little bit outside a trader's scope to sort of quantify. Sometimes it's best just to move on, take your loss. And if you're trading with proper risk management, your losses should never be more than 5-10% of your account. In fact, 2% on every trade is probably the main number that you're looking at there. So if you have two different trades, maybe looking at 4 to 5%. You don't really want to trade more than 2 trade ideas at the same time. That's a good point to notice there. Alright, so this is one of the big ones we're looking at now. Earlier on in the week, we're looking at pound Swiss long, which is sort of similar to a euro pound short. And those who've been watching this video will know what I'm talking about there. The two are linked via the euro Swiss. Now the euro Swiss itself, it's actually struggling to get out of this downtrend. And usually, the price action in the last few years has been a lot more stronger on the bounce than they saw yesterday when Ukraine came out and said there was a peace plan, which was denied a little bit later. You'd think you would have seen a bigger bounce than that. It's a very bearish signal. But back to what we're looking at here, if we're looking at playing the euro pound, we have to be nascent of where this sort of resistance is. Now, so far this market is finding a bit of resistance up here. It's a little dangerous though. Yeah, it's the same reason why it's dangerous is that if it doesn't come in today as we expected, then the euro is probably going to pop. Yeah, probably going to pop higher, maybe even break this 835 because we've got that problem in Scotland. Then it becomes a less clean trade. So really, it's one we only want to get an extension. So I'm looking to sell around 80.50, which is a little bit higher, past that resistance, stopped all gone, market gone into much more neutral territory. And where that leads the pound Swiss is hard. If the euro Swiss is going back towards 120, you're probably looking at the pound Swiss just without moving at all, going back towards 150. And even a scenario there where the euro pound pops up above 80, 80.50, then you're probably looking at around 150 and below. Yeah, so in this particular pair here, I'm not really interested until we get back down towards This sort of previous resistance, 169.50-ish. Yeah, that's a nice level to get involved here. Hopefully we get that, because even though the polls are close, they're still suggesting that there is not going to be a yes vote for Scotland. If there's a no vote, you're going to see the market probably rally 100, 150 points. I don't mind taking the risk, getting in at 149 here, 60, and then playing it around the polls. If the polls firm up and becomes more of a 50-50, you know, you probably want to get out before that actual date, which is on the 18th of September, and not run into that risk. That's just a little bit gambling. But if the polls are 52, 48, or 53, 47 with a small, you know, margin of error, it's not a bad little gamble there, because overall the two economies, UK versus Europe, are very different in speeds, and the recovery are much different stages. So you could see, you know, substantial pound Swiss buying over the coming months after this particular issue is out of the way in the 18th. All right, now, what are the ways to be trading the euro short if you want to earn interest? Is to play in the carry trades. Now, the euro Aussie it's already gone a long way. The New Zealand is under pressure because of milk prices. Milk prices fluctuate every now and again. They've been down for the last 6, 7, 8 months, but if they turn around, which they easily could, you might see this New Zealand come back into favour. That it really was. I mean, they've got a very strong economy. The raising rates over there, and it's really a lot of jawboning plus positioning that allowed this New Zealand to be cleaned out. I don't really feel like it's going to be the one they go after. You know, if there's issues, it seems like the market is going to get much more cleaned out soon. It's been back below 83 on the Kiwi a couple of times now and held. So look, if this bases soon, then the Kiwi's going to outperform. The euro dollar goes down. You know, you're going to see you make a fairly, you know, 1.5 pips here a day with this euro Kiwi short. In terms of where we come from, where we're going, we have been a lot lower before. You know, back towards that 150 level. There've been some selling on rallies up here, and it looks pretty clean as well. Now, here's one of the ones where we were trying to sell early in the week, and then the Kiwi had some bad news, and we just got out just in case. And it's one we're going to be looking at again, you know, shortly. You know, if the market does have that rally, definitely it's on my list. I didn't put it in my daily written update where I want to sell, but anywhere towards 160. So if you're looking in where 160 will take us, back towards this level here. So it's a good little break up, selling into that sort of resistance. You can get back up towards 162. Just take your stops. If the market wants to rally in this one, you don't want to fight it too much. Just wait for it to peak, wait for one of these candles on the daily, and get back in. It's just because of the ECB announcement, I'm not too happy to sell into this, but this is another selling opportunity as well. It's just that you know, back the other day when we did close a trade out around about 158 level, the Kiwi had not yet shown it was going to be stable at 83, and it may still not. You know, it may keep on going down. It's just the support it's been getting the last couple of days allows you to re-enter with a little bit more confidence on this trade. Okay, so as opposed to playing Euro Aussie, it's just a different play, same game. I think it's got a little bit more yield because the Aussie Kiwi is up towards 112, which if you play the Aussie Kiwi, you know it's quite high, and wouldn't take much here for the Aussie to be talked down. And if the Aussie positioning is so extreme compared to the Kiwi, then you're probably going to see that Aussie Kiwi go back towards 110, and then any sort of Euro Aussie, Euro Kiwi selling, it's probably going to lead to the Kiwi outperforming. So that's the reasoning behind there. It's a little contrarian, but it's still with a trend. Yeah, it's just inside the trend. Why am I picking New Zealand over the Aussie? All right, traders. In terms of everything else going in the market, be careful with the S&P. S&P is starting to show a little bit of signs of exhaustion, and now if we get that reversal, it's going to impact pairs like the Euro Yen and the Dollar Yen, which is good for us because we want to buy the Dollar Yen on the dip. So we'll be looking here for this, hopefully this the S&P to roll over soon. A little bit of bad news, maybe out of Ukraine or one of the companies over there. Something that the market can hold on to will lead to that pullback, and then we can use that to get in long dollar yen or even long stocks if you trade indices. All right. Good luck tonight. I'll be in the trading room at the ECB announcement and also the press conference after. If you want to have a chat with me or ask me what I feel about the actual speech as it's coming along, if I feel it's bearish or dovish, or the price action, just come into forexsignals.com into the live trading room. Good luck.